Well, the issue with the data is that the data interpretation is that you can look at it depending on what kind of person you are, right? So, me being the optimist, I am looking at the numbers slightly positively. So, that's a bit of a disclaimer. The driving force behind the market in the last 2 years has been the retail investors, even as FIIs continue to take money out from India. We look at some very interesting trends from last year's mega bull market and this year's steep fall, and it throws up some interesting anecdotes. As we will see with the help of numbers, the key findings are actually heartening. The trading volumes, they may have taken a bit of a knock, but the investment volumes are not that bad, and there are various factors like higher trading margins, trading losses recently, and of course a realization that long-term investment perhaps is better suited for retail than day trading. That's the realization which has happened in the last 3 months or so. For starters, we take a look at how many retail investors are trading on the NSE and BSE put together. This is the data given by the exchanges. Now, going by the exchange data, during the 2020 bottom, which is when the bull market started, this number was just 50 lakh. And look at how it jumped to 1.6 crores by the time we had the peak of 2021. And since then, it's come down to 1.15 crores, which is still more than double of the 2020 bottom. Of course, it's taken a bit of a knock from the top. Now, look at the daily cash market volumes and how that has shaped up. In 2020 lows, the number was 35,000 crores. This number jumped to 85,000 crores by the time we hit the peak, and since then has come down to 45,000 crores, which is still higher than what we had at the start, right? The futures volumes, that's taken a knock. In 2020, it's come back to the 2020 lows. 75,000 crores is what we used to do. It doubled to 1.5 lakh crores. It's come down to 75,000 crores after that massive surge in 2021. So, that's I think a very interesting point. Now, another interesting data point is through this rally and the decline, FIIs have been sellers of Indian stocks, and it's been picked up by retail directly and by mutual funds indirectly. This is hard data, right? The FIIs held 22.2% in 2020 lows. Even during the rally, it actually came down to 20.7%. And in the decline, it's actually come down quite a bit to 17%. And look at how retail has picked that up. From 8.4%, it's now gone up to 10.5%. And while it's cliche to say this, that this time it's different, I do hope that this time it's different and retail is not ending up buying at the peak. The next number for me is very heartening for those who believe in the equity cult. Now, the retail investors invested 1.43 lakh crores in 2021, and in the April to June quarter, this investment is already 49,700 crores, which is more than the average of 2021. Just to put number in comparison, in 2022, the whole of that year, the investment was only 51,000 crores. This, however, is X of IPOs, which in the last financial year was of course a bit of a rage with total IPO size of 1.11 lakh crores. In the first quarter of this year, the IPO size is only 32,000 crores, which looks large, but that's because of LIC, which alone was 21,000 crores. Finally, let's look at a very interesting stat, the number of DEMAT accounts, active DEMAT accounts, because you need this if you are an investor and not a trader. In March 2020, that number was 4 crores. Look at how it jumped to 8.9 crores by March of 2022. In April and May, while the pace has slowed down, it's still quite healthy. From 8.9 crores, we've gone up to about 9.4 crores. It still remains healthy. Net, the bottom line is that the Indian retail investor is here to stay and is trusting the process of investment.